What's up, guys? Mr. Catlin here with a virtual lesson 4.10. We're going over 3 new vocabulary words today: commission, markup, and discount. So yesterday we hit sales tax, which is something paid to the government. It's added onto your price. Tip, added onto your price, paid to your waiter, waitress, or server, cab driver, something like that. Interest. It's an additional amount that's added on to the balance of your loan, something you borrowed, credit card company, or maybe your bank account. It might be added to your bank account because you've earned interest. But today we're going to hit 3 new things. Markup. The markup is something that's paid to the seller, the person that's selling the object, and it's added to their price so they can make a profit. All right. They might buy something at wholesale price, mark it up to a higher value, and then sell it to us, the consumer, to make and earn a profit. A markdown would be the opposite of that. We call that a discount. This is paid to the customer because it's subtracted from the price that the seller was trying to sell it for originally, to encourage the customer to buy it because they want to move that product. So that's a drop. That's a decrease. Markup is an increase. And then commission. This is something that's paid to the salesperson, taken away from the payment of the store, and given to the person that actually does the work and gets it sold, like a car or a house or an appliance or somebody that sells things in a store. All right. They get paid a commission to incentivize them, to motivate them to sell the product to us, the consumer. So let's look at some examples of these. All right. Let's jump into markup. A car dealership purchases a vehicle at wholesale. This wholesale word, this means that they buy it maybe at a car auction, or maybe they get it straight from the manufacturer who makes the car for this price, $20,000. All right. They pay that much for the car. Well, they don't want to sell it for that much because they wouldn't make any profit if they sold it to us, the consumer, for that much. So they want to mark it up and make 35% profit. Okay, so let's look and see what that looks like on our double number line. All right, 35% more profit is 35% over the 100. That would put us roughly in this area here. Right now, the 100% value for this particular car is $20,000. All right. And we're going to mark it up 35%. And our job is to find out, what are they going to try to sell us that car for? What price have they marked it up to? We call this markup price the retail price. This is wholesale at 100%. That makes sense because it is the whole 100%. And now retail is this new improved price for them that they like because it's going to make them some profit. Now, we could set this up as a percent versus dollar amount table. We know that 100% was a $20,000 vehicle. So now at the 135%, we want to know what that is. So we could divide these and find out what our constant of proportionality is. It's actually a really easy one to do because anything divided by 100, 20,000 divided by 100 is just going to move the decimal over 2. So we actually have a constant of times 200. So we can do 135 times 200. That's what's going to link together our prices there, and that gives us $27,000. So they're going to mark this thing up to 27 grand, right? And what they've done is they've added 35%. 35% turned out to be $7,000. This was the markup over here, right? They marked it up $7,000 to a total retail value of 27 that they're going to. This is the sticker value that you would see on the window of that car. They're not going to tell you this price. This price here is hidden from your view, and you will probably never know what the true wholesale value of any car is that you purchase. This is the one that you're going to see, and you're going to try to, talk them somewhere in between those two so they still make a profit, and you hopefully get yourself a little bit of a deal, right? Other ways you could have done this is you could have just done 135% of the wholesale, because that is what we're trying to find, right? So that would have just been simply 1.35 times 20,000. That also would have given you 27 grand. All right, decimal shortcut, table, number line. You can use whichever one you like there. You know that as long as you're getting right answers, I don't really care too much. So let's go to the next one. Let's look at discount. Okay, so discount is we are taking a retail price and they can't move that item. And so they're like, we're going to put it on sale. We're going to have a discount. In this case, we have a digital camera that's $280, and then they're going to have a holiday discount that's going to drop the price to 210. So let's set that up on our double number line. So the first things first, the 100% price, what it used to be was $280. This is where it was at retail, right? We have no clue what the wholesale value is, nor will we probably ever know with this type of situation. We as the consumer are blind to the wholesale situation. All we know is what it used to be at retail price, what they were trying to sell it for originally, and now they're going to mark it down to a new price of $210. So that would be probably right here. Our job is to find the percentage that it's at now and figure out what in the world did they do? What subtraction did they do here to get down from 100 to wherever we land? So, as always, we could set up a percent versus dollar value table. We know that 100% was $280. So, we're trying to find out what percent it is at 210, right? So, if we could find out this relationship, well, if we do 280, sorry, I wrote 211 and I said 210. If we do 280 divided by 100, we get 2.8. So we know that the relationship to go this direction is times 2.8. So what could we do to go back? We could divide. We could do 210 divided by 2.8, and that gives us the percentage that we're looking for. They dropped this thing down to 75% of its value, right? It's at 75% right now. So they've dropped it from 100 to 75. So what percent discount did we get? Well, we just got to do 100 minus 75. 100 minus 75 is equal to 25. We got 25% off. 25%, which would be here, is actually equivalent to us saving $70, right? Because that's how much it went down. It went down $70 from here to here. So that 25% is what they subtracted from 280 to get 210. All right. Shortcut for that, those of you that like the decimal shortcut, you could have simply just done 0.75 times 280. This is a shortcut because it represents 25% off, right? So that could prove our answer is correct there. All right, let's look at the last problem about commission. All right, the last thing, and then we'll be done with our video lesson for today. So commission is a little piece of the sales price that the employee that makes the sale gets to keep for themselves. It's motivation for them to be a good salesman. If you're a good salesman, you sell a lot of stuff, you get bunches of commission and extra money. So if this employee at an appliance store gets 12% commission on every sale that they make, the first thing that I'm going to do is I'm going to drop this down to 88. All right. And the reason why I'm going to drop it down to 88 is because that represents a 12% loss. Now, why is this a loss? Well, because the company has to pay the employee that 12%. This is not an extra amount of money that they get to keep by selling this washer and dryer. They're losing 12% off of the retail price. Okay. We know that the retail price was $1,400, right? Excuse me. So if we drop this thing down 12%, we're going to find out what the company actually gets to keep for themselves. So percent versus the dollar, we know that 100% is $1,400. So whenever we divide these two, 1,400 divided by 100, that comes out really nice. It's just 14, right? And so we're looking for the 88%. This is a 12% loss, right? 88 times 14 is equal to 1232. So the price has been dropped down to 1232 for the company because 12% of that is given to the salesperson. All right, but let's look at the question because we got to be careful. What amount does the employee get to keep? Okay. Well, 12% of that the employee gets to keep, and that drops it down to this price for the company. But really, what they wanted to know was They wanted to know the 12%. So we should have put a 12 here to find out what the employee wants. The employee gets to keep 12%. So we need to do 12 times 14. And the employee gets to keep $168 because that's what 12 times 14 is. That's 12% of the selling price. Excuse me. So they get to keep 168 bucks. And that's the difference between these two things is that went down $168, which is equivalent to 12%, as we see here, here, and here. Shortcut for that, you could have just done 0.12 multiplied by 1,400, and you would have gotten the 168 price, right? If the question said, how much money does the company get to keep after the sale? Then you would have done 0.88 times that. And that would have told you the answer that we got of 1232. Lots of different ways to get there. You just got to understand the basics of who gets what increases, what decreases, understanding discounts, commission, and markups. Have a good day. See ya.